Hey traders, welcome back to another edition of the Market Preview. My name is Vasily, I'm your trading coach and professional forex trader. For today's weekly edition, we will focus more on theory. This week was quite tough, and with the elections, with uncertainty, with the contested elections, in my view it is quite hard right now to make mid-term and long-term predictions. So instead of that, we will focus on theory. We will discuss the price action and how with the price action we can identify the trend violation and trend change. And on the example on gold, I will show you how I apply these techniques in practice. So I truly believe it will be a very, very important lesson for you. So please don't forget to leave a lovely comment, like this video and subscribe to my YouTube channel. So let's start. So the first thing that I want to tell you is that no matter what market we trade, no matter what time frame we trade, and no matter what our strategy is based on, we must admit that the price never goes just like that. Yes, in a bearish trend, the price never just falls like that. And in a bullish trend, the market never just grows like that. If we follow the price action, we can see that the price always fluctuates. We see the correctional movements, we see the pullbacks, and with the accurate price action following, we can identify such kind of zigzags on the market. Yes, we can see that the market always corrects itself. It's never stable. It is always chaotic. And with the candlesticks, with the wicks, we see how unstable the market is and how chaotic it is, and how even if it's trading in a bullish trend, how often we see the pullbacks there. And what is good about that, with the proper following of the price action, with the proper drawing of this zigzags, we can make predictions. We can make predictions and we can identify very important things. And I will show you one of the things that you may identify with this zigzag following. So let's take here the empty chart and let's discuss the abstract things. So as you know, the market in a bullish trend shows the picture like that. We see the sequence of the bullish impulses to the upside and correctional movements, higher lows, higher highs, just the classic example of a bullish trend. In a bearish trend, we just see the opposite thing, yes, so we see the strong bearish impulses, then the short correctional movements, and then the bearish continuation with the new structure lows, yes. And what is important is that these movements, they never last forever. Yes, they are not infinite. At some moment the price becomes very, very high and bears start to push, so the trend violates. Yes, and same thing with the bearish trend. At some moment the price becomes so low, so buyers start buying, and we see the violation of the trend. And it is very, very, very important for you to know at which moment violates the trend and at which moment we see the clear reversal sign. So let's just start with the bullish trend, yes, and let's just draw the classic bullish trend over here. So what do we have right here on the chart? So first of all, of course, here is our last structure high, here is our previous structure high, and here is our last high low, yes. And it is very, very important to get where at which point the trend is violated, right? So what do we do? And obviously at some moment we see the bearish leg. The bearish leg goes and the market tests the previous structure high, yes. And for many traders it is a warning sign. They look for the bullish continuation from that point, and if they see the leg to the upside, if they see the new higher high from that point, for them the market is stable and it just shows the classic bullish continuation in a bullish trend. But if the market goes lower, instead and violates the structure high, for many traders it is a very, very important warning sign. They say that this structure is broken. This structure that was the support right now turned to resistance, and for them it is a clear sign of the violation of the trend, yes. But though there is some logic behind that, in trend following systems and the classic price action, unfortunately such approach doesn't work. Of course, when we see the bearish legs, the correction cycle, the market needs to go lower. Yes, the previous structure high right here is very close to our current high, and for the correctional movement, this short movement is just not enough. Bears just need more. Yes, buyers need to take some profits, and of course it can be much longer. So instead of focusing on that structure right here, we should pay attention to the last high low. In my view, last high low is a very important point. And until the market is trading above the high low, it is the clear indication that the market is still trading in a bullish trend. Yes, and it can start the bullish continuation from each and any point between the current structure high and high low. Yes, this movement will be just, it happens quite often, and most of the time in a bullish trend, bullish continuation starts from any point between. At some moment the price can even reach the last high low level. Yes, and still, while it respects that, while it is trading on that level or slightly above that, clearly the market for us is still trading in a bullish trend. But the situation changes dramatically when we see the structure low right here. Why? Because here it will be a new lower low, lower close. Yes, if here we had our high low, this will be a new lower low, and it is the clear indication of the trend violation. And very important thing here, very important. Does it mean that the trend right now is bearish? No. There are two scenarios right here. First scenario is that it can be a so-called deep correction. Yes, so it can be a deep movement, deep correction, and after that the market can easily return to a bullish trend with the new higher close. Yes. The another scenario, however, is that we see the pullback to the upside relatively short. Yes, like that. The market sets the lower high right here, and then what do we see? New lower low, lower close. This is the classic example of the trend change. Yes. So again, just the violation of the last high low level is just the indication of the trend violation, not change. But once the price sets the second lower low, yes, the second lower low with the lower high right here, then it is the indication not only of a trend violation, but also of a trend change. And it is a very rule for you to follow. Same thing basically with the bearish trend. Yes, and here just the classic example of how the market trades in a bearish trend. And here goes our last structure low. Here goes our last structure, our previous structure low, and here goes our lower high. Yes, so here again we have three important points that we must consider. So again, we assume that we consider the market to trade in a bearish trend while it is trading below the last low high. Yes, everywhere here, no matter where the market is trading, yes, if it is below the last lower high, it is still bearish for us, and we still expect a bearish continuation, and we are bearish biased. But the situation changes when the market violates the last lower high level to the upside. It is a very important warning sign for us. And of course, if we see the pullback and new high, it will be the start of a new bullish trend and clear trend change. But if the market respects some point right here and then goes lower to the new structure low, and then again the market is in a bearish trend and it was just the deep correction. Yes, so it is, we have two scenarios, and depending on these scenarios we see either the deep correction or the trend violation and trend change. So now let's just discuss on gold how these rules we can apply in practice. And though this week was quite tough, and though I knew that for many traders it was just terrible trading week, with classic technical analysis, structure, patterns, we managed to achieve very good trading results during this week. If you follow me on social networks, you know that this week I made 7 predictions, and 6 out of 7 predictions played out nicely, and it just shows how accurate and how efficient technical analysis is even in times of uncertainty. So if you want to learn my approach, if you want to know how I make these predictions, I want to invite you in my premium educational group. There I show how I trade live, I show how I execute the analysis live and how I trade the market. Yes, I explain my entire thinking process behind. I explain to you the logic behind my trades, and it is just the best way for you to learn how trading really goes. So I will leave all the links in the description below to the website with the information, with the social networks where you can find me, and just don't hesitate and text me for more details. I will be happy to provide you the information. So here we have gold daily chart, and first, as always, as we discussed, we are looking for the zigzags. We analyze the price action, and here let's pay attention to the main swings. Yes, so here is our very strong bearish leg. Here was our structure high. This is our current market high in gold, and from that point the market dropped here, and here we have our high level. Yes, then what happened? Then the price retraced, and here the price set the lower high. Yes, why lower high? Because this high is lower than this high. Yes, quite straightforward, I believe. Then the price dropped again. Yes, and here what do we have? Here we have with you the lower low, lower close. Yes, so what do we have here? Here we have classic example of the bearish trend. After this sharp bullish trend, you can see a clear trend violation, and you can see the sequence of 2 lower lows and lower high. Then let's follow the price action and just try what happened next. You can see that here the price retraced again. Yes, and here we have new lower high. But then look what happened right here. Here the price set the high low. Yes, why it is the high low? Because this low is higher than our current structure low. Yes, and after that, look what happened. The price started to grow, and we have clearly violated the previous lower high level. We closed above that with this high momentum bullish candle. The next day, we were clearly trading above that, and the weekly close, yes, this week candle, the last Friday's candle closed above this structure level. So clearly, what do we see right here? Look, we have here structure low. Yes, look over here, structure low, lower high, high low, high high. Yes, so we see that the market has violated current bearish trend. It violated that, and it started a new bullish trend. Yes, it looks like the market returns to a bullish trend. And for all gold traders, it is a very, 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 very important sign. The problem is, it doesn't mean that we just should start buying gold right now. Based on our rules, what is important for us to realize is that now gold can start growing from any point between this high low and current structure high. So here, if we draw the zone, the triangle, this will be the huge area from where we can expect a bullish continuation. Yes, and I will be looking for this point. Look, here we had this trend line, major trend line, and I will look for the retest of this trend line, and from that I will expect a very strong movement to the upside. So you see, with the price action, we make predictions. With such zigzag analysis, we see the trend violation, the trend change. We now knew our bias. We knew where the market will most likely go. But then intraday trading, then the trend lines, the structure, it will help us to find the safe point from where we can catch this bullish continuation. So the conclusion is the following. You know, when the market reached that high in August, the price started to trade in a bearish trend. The price was trading in a bearish trend, and you know, in October, not even in October, in November, it has finally violated the bearish trend, and now we're back again. We are back again to a bullish trend, to our long-term bullish trend. And now, most likely, the price will keep growing. Yes, this is our long-term forecast. This is our mid-term forecast. But for short-term forecast, not clear. You see, we have this major area from where we expect the bullish continuation. So now, we just wait for the safe entry. And only when the market reaches the point from where it is safe for us to buy, only then we will buy, and only then we will be in the market. Yes. Alright, that's it, and I truly believe it was just very good lesson. And what I want you to do right now, I want you to try these rules by your own. I want you to backtest them, and I want you to just feel how efficient they are, how efficient this technique is, and I want you to try to apply these rules in trading. Yes, please don't forget to leave a lovely comment on this video, please don't forget to like it, and please don't forget to subscribe to my YouTube channel. It motivates a lot to record more educational videos for you. And all the links about my social networks and about the premium stuff in the description below. Have a great weekend, guys, and just good luck next week.